What's going on, my fellow wealth creators? Matty Ice here. In this video, I want to talk about why I believe infinite banking is the absolute best way to purchase a vehicle. There's a lot of different benefits to it that I'm going to cover, but the specific one that I want to start with is protection from your car getting repossessed. So we're seeing here, you'll see this as I go through some of these articles. This was brought to my attention by Chris Noggle, so shout out to him. I just watched the video on his channel about this, and this kind of stuff is just really sad. A lot of people are struggling right now. We're seeing a significant increase in auto loan delinquencies and significantly higher monthly payments because of inflation, higher interest rates, et cetera. And this is right from the Fed, guys. These are the Fed's notes. So right from the Fed here, they're saying delinquency rates on auto loans rose substantially to above pre-pandemic levels by the end of 2023. That's not good, obviously. But if we look at some specific numbers here, let's see. Yeah, auto loan 30-day delinquency rates have risen considerably in recent years. They do remain below peak levels of the Great Recession for now, but they've exceeded pre-pandemic levels by about 60 basis points. So you can see we're on a pretty significant rise there. And then let's see. Yeah, this is where it talks about the monthly payments. So this is so crazy. This just shows you how detrimental inflation is to the average person here. From January 2017 to 2020, average required monthly payments for auto loans were increased about $40. Not too crazy. That's kind of I would put that in the normal category. So from $430 a month to $470 a month, still not good, but it is what it is. But if we take the same amount of time from January 2020 to 2023, it increased from $470 a month to about $600 per month on average. That's a $130 per month increase. Percentage-wise, that's just astronomical. And it just shows the massive negative impact of inflation and also the higher interest rates. So again, the benefit of utilizing something like infinite banking, though, is that we calculate our monthly payment so we can pay back our policy loan. All right, we do all that, but it's actually an unstructured loan. So we are in control of how much we pay back, when we pay it back, and if we do fall on hard times, income is tight. And it's the difference between putting food on the table or making my car payment, or in this case, making the payment back to my policy loan. Well, I can comfortably choose to put food on the table and wait till I catch up. And I don't have to worry about my car being repossessed, my credit taking a huge hit. How about late penalties? You call the bank up and say, hey, I'm struggling right now. I need to delay payment, whatever. There's probably going to be a lot of fees. They're going to be a hit to your credit. Some banks probably won't even do it. I don't know. But that just puts a lot of stress on people. If we look at the actual repo numbers here, so this is from thedrive.com. According to Automotive News here, let's see, repos have gone up by 23% compared to the same period last year, same time period last year. That's just crazy. And it's saying here, unusually high number of repos in America is due in part to interest rates and inflation, like I just mentioned. It's pushing car payments up. Everything is getting more expensive, so people can't afford their monthly car payments. So that leads to their vehicles getting repossessed. And let's see, it's increased by 14% compared to the first half of 2019. So those pre-pandemic levels. It's just absolutely insane. Let's talk a little bit more about interest rates too. I mean, so the average interest rate for new car loans, 7.3%, 11.5% for used car loans. So this is a really good transition to the next benefit of using infinite banking to purchase your vehicle. So this is exactly what I did to buy my car, guys. I could have paid cash. Like, what do we normally do? We pay cash or we finance it through a bank. All right, we're not talking about leasing. That's something else. I'm talking about actually buying the vehicle. All right, so I had the cash, but I learned about infinite banking. So I put a large portion of my safe money into this policy first, and then I borrowed against it to pay cash for my vehicle. So I own the car outright, all right, but I do still have this policy loan that I've since paid it back. But I put myself on a repayment schedule because we want to be responsible with our policies, obviously. And so I was making those payments back, paying back the policy loan, but I did it on my own terms, right? I set how much my payment was. I controlled when I was going to pay it. So if I did start struggling, the life insurance company is not going to be knocking on your door, showing up with a tow truck to take your vehicle if you don't pay your policy loan back. Heck, they don't even know why you take the policy loan. It's literally you just call them up or go on your online portal, tell the life insurance company how much money you need, and it's in your bank account in 2 to 3 business days. No questions asked. And so, but I remember when I was doing that, I actually did get a couple of quotes for some car loans, and the lowest interest rate that I was quoted was 10%. And that's when my credit it wasn't great, but it was pretty good. And it's 10% versus my policy loan was only 5.5%. Guys, like, how much of a difference does that make in your monthly payment there? Like, that's pretty significant. So, and mine was a used car. So would you rather pay 11.5% or 5.5%? Well, I'll take 5.5% plus all the other benefits that we get all day long. But this is, so far we've covered protection from your car getting repossessed, because the policy loan is already collateralized by the death benefit, versus with the bank loan, the auto loan, the collateral is the vehicle. So if you don't pay that loan back, they take the vehicle, right? That's the collateral for it. Well, that's not the case when it comes to infinite banking using these dividend-paying whole life insurance policies. So protection from car repossession. We have interest rate protection as well, potentially. There's another one that I want to talk about. It's lost opportunity cost as well. Like how much the car, like if we were to pay cash, how much would that purchase actually cost us over a significant period of time? So we think that we're saving interest, right? But we're also losing interest that we could have earned from the cash that we're paying. That's why putting the cash into the policy first, because these policies get nets about 3 to 5% tax-free compound growth for the life of the policy, right? We're not losing out on that interest now. We're going to pay a little bit of simple interest, but it's a small price to pay to get that uninterrupted compound growth here. So I ran some numbers here in a compound interest calculator for you guys. I paid $28,000 for my vehicle. I put it in the policy first, then I borrowed from the policy to pay cash for it. All right, but it's $28,000. And if we look at, if we start thinking about our finances long-term, which we should be doing, if we look at the course of 40 years, what would a $28,000 purchase in cash actually cost me over 40 years at 4%? Because that's about what my policy is netting. Yeah, it's $134,000, guys. So by changing one thing, instead of changing one thing in my personal finances, putting the money into the policy first versus paying cash for the vehicle, I put $134,000 back into my pocket over the course of 40 years. Like, these numbers get ridiculous the longer the time period. I'm 36, planning on living to, hopefully at least 90, whatever. Now we're looking at $198,000, almost $200,000 back into my pocket. So really, really powerful when it comes to eliminating lost opportunity costs here, guys. The other thing too is when we're paying back those policy loans, we're putting that money back into our own banking system, quote unquote there. Like, because every time you make a payment, that money is immediately available in cash value again to borrow against if you need it. Can you do that with a bank loan? So like, if you make a payment to a bank loan, can you call up the bank and say, hey, I need that money back now? No, they're going to think you're crazy. You got to apply for a new loan or a new line of credit or something. It's not the case with infinite banking. When you set these policies up right, when you put money back into the policy to pay that policy loan back, that money is immediately available for you to use again. So you're putting money into the policy, you take it out to purchase an asset. All you're doing is putting the money back in over however long, whatever your payment structure is. So you're recapturing all of that principal, right? And not to mention you're paying significantly less interest, most likely as well. And so you're keeping the wealth within your ecosystem, within your wealth building empire, within your banking system, whatever you want to call it, right? So we're able to recycle those dollars over and over and over again, while our money is continuing to get that uninterrupted compound growth. Because remember, we're taking a policy loan here. We're using the life insurance company's money to purchase the vehicle, not our own. Our money is still growing in the policy. And when we pay that policy loan back, we have all of that money back that we've put back into the policy that's now available to us again, and we have the car. When you do the bank loan, what do you have after, or even if you paid cash? So if I paid $28,000 in cash, what do I have to show for it? I have the car. That's it. If I used a bank loan, okay, and I pay off the loan, what do I have to show for it at the end of the loan? Just the car, just this depreciating asset. Versus if I use infinite banking and I fund my policy first, what do I have to show for once my policy loan is paid back? Well, I have the car, but I also have all the money available in a cash value again to use for another purchase, another asset. Meanwhile, all that time, my policy was getting that uninterrupted compound growth plus all the benefits. You got the living benefits, death benefits, like it solves so many problems. But like this, so when you weigh those options out, or you analyze those different scenarios, like which one is better, cash, bank loan, or setting up your own policy, setting up your own banking system with infinite banking? Like infinite banking is way better without question. Here's another one that I saw. Let's see. Oh yeah, I was trying to get the number, like the exact numbers for how many were repossessed, but not a huge deal. It's just the fact that they're significantly on the rise is what's important. But I just want to do a quick recap here on why infinite banking is the best way to purchase a vehicle, right? So we're safe from repossession, all right? Because we have that repayment flexibility, it's not a structured loan like a bank loan is, then we can determine when we pay that policy loan back on our own terms, right? So when cash flow fluctuates and we fall on hard times, we don't have to worry about losing our car. Like how devastating is that to the finances in general? Because now, maybe you're not able to get to work, but also how devastating is that to your spirit, right? To your mental health, emotional health as well. Like it's just having something taken away from you because you're struggling right now. That's just, that's pouring salt on the wound, So in this, when we use infinite banking though, we're not at risk of losing our vehicle, all right, if we don't make payments, all right? So really, really powerful, recaptures that principal and interest. Like I said, when we take the money out of the policy, we purchase the asset, and then all we're doing is slowly putting that money back into the policy, which is then again available to use for another purchase or an investment opportunity, whatever. So we're recapturing all of that principal and interest versus paying it back, paying it to the bank, or kind of brings me to the next point. Giving up all the interest that we could have earned by paying cash. So here's a great quote that I learned early on in my journey, is that we finance everything that we purchase, guys. We either pay interest to somebody or we lose interest that we could have earned. Like everything, every purchase we make in our life is financed. So if we can purchase it in a way that eliminates that lost opportunity cost, wouldn't we want to do that? Because that adds up to hundreds of thousands of dollars that we put back into our pockets over our lifetime. So it eliminates that lost opportunity cost, like I showed you guys, because our money is still growing in the policy, guys. We're using the life insurance company's money, just like the bank. Like if you go to the bank to get a loan, you're using the bank's money, not yours, right? We're doing the same thing with the life insurance company, all right? We're using their money. We purchase the vehicle. Our money is still growing in the policy. It's also why this is so much better than paying cash, because when you pay cash for the vehicle and you deplete the account, how much interest are you earning on that money now? Zero, nothing. Like you got nothing to show for it except the vehicle. That's it. But we're still earning interest when we're utilizing the infinite banking concept, and we're getting the vehicle that we want as well. Interest rate protection, like I said, I paid 5.5% on my policy loan versus 10%, 11.5%, whatever on a regular auto loan, with the risk of it being repossessed. And also having to go through the application. You have to have good credit. If you don't have good credit, obviously your interest rate is going to be significantly higher, meaning your monthly payment is going to be a lot higher, increasing the risk of you potentially defaulting, right? We don't have any of those issues with our policies with infinite banking, guys. No application. You don't have to explain what you need the money for. You don't have to, like, your credit doesn't matter, income doesn't matter. It's just all based on how much cash value you have in your policy. You call them up, log into your online portal, tell them how much you want, and it's yours. Like no questions asked. So really, really powerful stuff. I just wanted to share that with you guys real quick, though, because once I watch this video, it's just like, man, that really sucks. There's a far better way to do these types of things, a far more efficient way, where we're eliminating that lost opportunity cost, potentially paying less, like a lower interest rate, but also we're safeguarding some of the assets that we have in our life just by changing how we purchase them. That's literally all we're changing. So anyways, I hope this was helpful, guys. If you have any questions, drop them down in the comment section below. I'd love to hear your feedback as well. And make sure you check out all the links in the description. I have tons of additional training, tools, resources about instant banking to help you along your journey. All right, so make sure you take advantage of them. Hope you guys are crushing it, and I will talk to you in the next one. To your success, Matty S is out.